A day of Tom Lee, Bitmine chairman. I just read the Bloomberg article and there's a couple of things that I wanted to show you guys that it's saying and showing that Tom Lee is one of the best people that can lead this company. Also, we will talk about Michael Saylor and a new podcast that he did that gives us a little bit of outlook into the digital treasury company market and vision. So with that said, let's dive in.
Welcome to the game, I'm the wolf of Dubai.
So if you don't know who I am, my name is Danny and I'm looking for stocks that can go up 10, 20, 30, 50x. And I did this for Tesla and for many other stocks as well. Nvidia, Palantir, Robinhood, and my subscribers bought even houses or apartments. And if you want to trade with us, then you should check out xtendaytrading.com, where we trade for you with our software that we designed by our own. I spent more than $1 million to develop this software, and we have a whole team that is working to send you just like 5 to 8 trades into your portfolio. The last 2 weeks, we didn't even lost one single trade in the hardest stock market week. If this is not enough, then I don't know what is. We want to average about like 8 to 15%. So if you start with $10,000, which is the minimum, then you should be somewhere around like 58,000 at the end of the first 12 months. Okay, if this is interesting for you, schedule a call and I see you for the personal 15 minutes to see if we can help you as well. Now, when I saw this article, it was fantastic because it gives us a little bit of a glimpse of the chairman's life, okay? Tom Lee is a kind of hero on Wall Street, right? He, with around like 40-ish years, he was, at the top of Wall Street. He was chief analyst at JP Morgan, obviously, having a good shot to go higher and higher and higher and maybe one day become the CEO of JP Morgan. But he said he wants to do something different. So he took his colleague and then they founded Fundstrat. And Fundstrat not only gives analytics to 10,000 retail investors, but also to 400 institutions, okay, which is quite interesting because that shows you how much trust this is behind the power of analytics by Tom Lee, okay? Then they go out about the day that he's very much optimized for the day, right? So they went and tried to take the train to be faster meetings. He had back-to-back meetings. Like, he's a very hardworking guy. He writes even his own book right now. So we will know much more about his lifestyle, his ideas, his vision. And what I have seen, money is obviously one part, but I think that showing him going from JP Morgan, from a very safe haven to something to let the retail investor benefit, right, is something phenomenal. And he is also taking other bold bets, okay? Like, he said that Bitcoin will go absolutely crazy, okay? And it did. And he lost almost a lot of handful of institutional investors because back then they thought like, okay, Bitcoin is nothing real, right? But he stick to his prediction. Same like he stick to his Ethereum prediction, and that he is putting all of this extra work and reputation behind being the chairman of Bitmine. This shows you just that like this is the guy that you want to give the money to so he can make more out of that, right? So imagine like when you invest in anything in the world, right? You always take something and say like, okay, if I give the money, if I invest into Tesla shares, essentially I'm betting that Elon Musk is making more out of that, right? The company is doing better numbers, more sales, more revenue, more profits. So my investment is getting much more valuable, okay? The same goes with Tom Lee, right? And obviously he was asked in the interview, what about Bitmine, right? And he said like, it will recover. It's just like very, very tied to Ethereum price right now. And this is also maybe gifting us a little bit of an insight that someday maybe they will be not so much dependent on Ethereum price anymore, okay? Because they will have so much other things that they could do, okay? So very interesting, very, very interesting what they say. He lives in Connecticut and in an area where a lot of Wall Street, wealthy Wall Street guys are living. So, but we know that he has like a bat in his office. So that's quite interesting as well that he works so hard. But then I just found out a brand new podcast by Michael Saylor and Grant Cardone. I love Grant Cardone because he's just like keeping things very, very simple, right? And to the point, he's straight guy and he's just having this very simple American style of asking questions. And Michael Saylor, I always think like at some point, is this guy crazy? But when I read him and I listen to him, I always say like, wow, what he says is like very, very intelligent actually, right? So here's a clip from this podcast, which I found extremely important. What is actually his bet, his idea behind it, why he did it, and so on and so forth. Here we go.
But let me ask you, how do you make a decision after years of accumulating that much fiat, that much cash?
Yeah.
How do you make a decision in a week? I'm going to drop $250 million, half of my reserves into one investment. How do you get that much conviction?
The lockdowns.
Did it take a minute?
The lockdowns hit. The politicians make us close the office. Everybody goes home. Google and Apple and Amazon and Microsoft start sniping all of our employees from home. It's pretty clear, right? If I want to destroy your company, I sentence all of your employees to home jail, right? To home imprisonment. And then I offer them 20% more to redirect their computer browser to some other company. So it's clear we're going to lose all of our human capital. The stock tanks to $9 a share, and the company's worth nothing.
This was MicroStrategy at the
2020.
Yeah.
I'm telling you the story of you're asking me, how did I get conviction?
The audience, your software company.
It's March of 2020.
Okay.
We're a software company. Yeah. We're a $500 million software company. And the lockdowns come and all of our employees get sent home and we're losing them to Microsoft and Amazon. And so we're losing our human capital. We're a public company. The stock tanks, it's valued at half of revenue or something.
Wow.
Call it $3 a share. That's what the company's worth. And if we do, and then Jerome Powell says, well, the 500 million in capital, that's worth nothing forever.
Wow.
And our choice is either sell the company. It's like a fast death. Just sell the company, give up, write off 30 years of work. Or a slow death, cling on to $500 million of cash yielding zero, watch it get inflated 20% away a year, right? The inflation rate was 20% at that point. We're printing money like there is no tomorrow. Costs are, you can't see the inflation in 2020 because it's illegal to buy anything. Right? When there's a war and the government doubles the money supply, but it's illegal to buy anything, you don't see the inflation. You see the inflation after the war ends when when you can go buy an airplane ticket or go to a concert or try to go to a hotel, and at that point everything doubles or triples in cost, except you don't have any money, right? Because the government doubled the money supply. So it was pretty clear to me that the currency was collapsing. And we were going to have all our human capital stripped away, and we were, having all of our financial capital stripped away. And, I think the stock traded $1 million a day. Like no one cared at all about the company. And we're either going to basically sell the company, give up for, $8 a share, $10 a share, or whatever, or we're going to cling to life for 5 more years, at which point all of our employees will have quit. The product won't be any good anymore. We've just had all of our talent stripped away from us. And then the world will say, well, they went out of business because they deserved to go out of business because they couldn't compete with the big guys, Or we could do something. We could take a risk. So it's that point in the movie where the guy's sitting in the Citadel with an army, and he sees there's a war, and there's the War of the Roses, and there's there's the white faction, and there's the red faction, the Yorks and the Lancasters, and you're either going to sit there and get starved to death by both of them, or you're going to pick a side, and you're going to ride out, and you're going to fight, and if you win, maybe you get to live, and if you lose, well, at least you went out fighting, right? And so that was where we were at in 2020, and we decided it's either a fast death or a slow death or fight. And I thought maybe I would prefer to fight.
So you thought at that time, buying $250 million worth of Bitcoin in one day Had you bought any up to this point at all? Like,
No, I mean, the way we
you
got
own
there,
Bitcoin?
no, nothing.
nothing.
No, I mean,
crazy.
look, it didn't happen in one day. What happened is I concluded by April that this was a way out. Bitcoin was growing 80% a year at the time. So if you can buy something appreciating 80% a year, that's a commodity on your balance sheet.
Faster than your company.
It's like, if you could buy a digital monopoly growing 80% a year at 1 times revenue, would you?
Yeah.
Of course you would.
Yeah.
If you could buy a digital monopoly growing 30% a year for the next 20 years at 1 times revenue, would you? Everybody would. It's not a complicated idea. I expect Bitcoin to grow 30% a year for the next 20 years. It's a monopoly. You're getting it, you buy $100,000 worth of Bitcoin, you're getting a $100,000 business growing 30% a year. This monopoly at 1 times revenue. Why wouldn't you? Everybody would. The breakthrough was just thinking of it as doing a acquisition of a digital monopoly on money, right? It's the dominant digital monetary network, right? So we have to do a transformational acquisition. And
To survive.
And since there's no other company growing 80% a year that's available at 1 times revenue that'll sell themselves to us, Bitcoin was the deal, right? Bitcoin
No
was,
employees.
yeah. So we looked at it and we thought we can buy the dominant digital monetary network at 1 times revenue. It's growing 80% a year. On paper, it looks just fine. It's just no one ever done it before. But the theory isn't that complicated. I mean, what did Facebook pay for WhatsApp or for Instagram?
WhatsApp, yeah.
WhatsApp. I mean, think
what's
of
up?
what did Google pay for YouTube?
Yeah.
Okay, so it's not a complicated idea. You
No,
buy the monopoly,
yeah.
something that 1 billion people need, nobody can stop, that's in hyper growth mode, that'll sell itself to you cheap. Why wouldn't you?
Yeah.
So that wasn't the problem. The problem was no public company had ever done this before.
Right.
And so first I have to convince the officers of the company. Then I have to convince the board of directors of the company, right? Now, and that takes a while. And then yeah, the logical thing is, let's just go ahead. We're going to bet the company on this, buy 500 million worth. But, between the lawyers and the risk managers, everybody thought, well, that's too risky. So let's do some. I said, well, what about 400? I'll do a buyback. 400 million of Bitcoin, I'll buy back 100 million of stock. No. 350 million of Bitcoin, I'll buy back 150 million of stock. No. 300 million of Bitcoin, I'll buy back 200 million of stock. No. Okay, here's my best and final offer. 250 million of Bitcoin, and I will buy back $250 million of the stock in the open market, the tender offer. Okay.
So explain that to me. So
when we announced the deal, what we said was, we're going to buy 250 million of Bitcoin.
yeah.
And we're launching a tender offer. The stock was $120 a share. We'll buy you out at $140 a share if you don't like the idea. So we basically said,
And who funded that?
the company. The company had $500 million.
Got it. Okay.
And the company said, we're going to buy
I'm a real
back.
estate guy. You got to remember, I'm a real estate guy, dude. It's like, to us, it's like, I got to see it. I got to touch it. I got to feel it. So you got to go slow with
I'm the CEO of a public company.
Okay.
And I want to do something very risky.
Got it.
But you're
Never been done
you're
before.
the outside shareholder and you think I'm crazy.
Right.
So I say to you, I'm going to go bet the company on Bitcoin, but if you don't agree with me, I'll buy you out your shares.
Got it.
And so I'm going to offer you $140 a share.
$20 premium.
Yeah.
Yeah.
If you want to get off the ride.
How many people took you up on that?
So the way it worked is we announced the 250 million in Bitcoin. Then we had a 20-day tender period. We made a tender offer. We offered to buy up to $250 million. The stock traded up, and then it traded above the $140 price. And everyone that didn't like it sold into the open market at north of 140.
Wow.
When the 20 days finished, we had $60 million worth of shares tendered. We paid off the $60 million of shareholders at 140. We had about $175 million of extra cash at that time. We turned around and bought Bitcoin with that. So the first deal was 250, and that second deal was after the tender offer. It was the extra 175 million, and then Bitcoin rallied, the stock rallied, ran through the roof, and the rest is history.
So Bitcoin was what price then? Do you remember? I'm sure you do.
When we did the first deal, we bought Bitcoin, and we bought it like 11,800. Okay.
And you just bang the bell, right? You just hit it?
No, then immediately Bitcoin crashed down to 9,600 or something, and we lost $40 million in the next 2 weeks.
Oh my God.
And so
what's going on for you when that happens? Because that's what happens every time I buy it. It drops 20%.
It's an instructive story because the point is it was never easy. It will never be easy. And if you were buying expecting to get an immediate risk-free return in the next 2 weeks, you have the wrong attitude. So we bought it. The price crashed. We went through with the tender offer. We got 175 million, and we went and we bought the next tranche at 10,200 or 10,300. So we doubled down after the dip. And then it turns around, flies through 12,000, runs to all-time highs of 19,000. The stock 10x's.
Yeah.
You know, all the stock options get exercised. We get another wall of money. We buy another $50 million worth.
Where's the wall of money come from? Explain the wall of money. It sounds sexy.
All the employees had stock options. And the stock options were, sorry, let me just adjust my cushion.
No, please, help me.
The stock options are, struck at whatever, 190 bucks, 80 bucks. This is pre-split. The company eventually split 10 to 1. So if these numbers seem different to you, that's because we split it 10 to 1. But so the stock options are whatever, 80, 90, 100, 110. When the stock's trading between 90 and 120 during the lockdowns, the stock options are worthless. When we bought the Bitcoin and Bitcoin rallied, the stock went through the roof, rallied up to $200, then $300 a share, then $400 a share. When the stock rallies, all the employees exercise the stock options and the company gets an avalanche of money from stock option exercise.
Got it.
So as you can see, it's like he's betting that Bitcoin will be one of the best software products or products over the next years. And obviously, once you zoom out, he also says that, it's very important for them to have that as an option for institutional investors, that, Bitcoin went up and down over this period, like, showing you that there must be resistance in your emotions while you invest in this kind of things. I hope you liked this video. Make sure to follow all my channels and make sure to subscribe and like. And also, don't forget the grass is greener on the other side. Check out xndaytrading.com and I see you on the other side.